Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the Inside ETF conference. I'm here with Sal Bruno, Chief Investment Officer at IndexIQ. Great seeing you, Sal.
It's great to be here, Tom.
So there's a lot going on in the alternative space, but from a smart beta strategy, you folks have something that's quite interesting regarding high yield. Tell us about it.
It is unique and different in the high yield space, so we're taking the low volatility concept that's been applied successfully and documented by the academic research on the equity side for a number of years, and we're taking that and we're applying it to a very liquid universe of high yield corporate bonds.
So how does it work?
So we start off with a broad universe of high yield bonds, and we filter it for liquidity to make sure that the individual bonds are tradable. We then use a concept that we developed called marginal contribution to risk. And what that does is it looks at the duration of each bond as well as the spread of each bond. And using those metrics, we try to filter out the 50% most riskiest bonds in the universe. So you're left with the lowest risk, high yielding bonds in the universe.
So here we are, better quality bonds, right?
Yes,
more liquid bonds,
yes,
and hopefully less volatility, correct?
Yeah, and our research has shown that you get about a 25% reduction in volatility, and over long cycles where you have both up and down markets, you can get very similar returns as a broad high yield universe, but again, just dampening the volatility.
So here we are in potentially rising rate environment.
Yes.
People are concerned on the treasury side, shortened duration to a great degree, but pro-growth periods, there are a lot of times when people could also make decent money in corporates and high yields, correct?
Absolutely, and we've seen the spread on high yield bonds go from 8.5 down to about 3.5 from the beginning of 2016 when we sort of saw the spasm in the high yield market. Yeah. Historically, the high yield bonds have sort of, the spread has bottomed out somewhere in the 2.5 range. So while there's definitely potential that we could see a little bit more spread contraction, at some point we're likely to see spreads starting to expand out, and that's where the strategy is more likely to do well.
That's great. Well, you folks at Mainstay, IndexIQ, you know, you got a great team, you've got some great products, and I also love the research that you provide along with the education. So keep up the good work, and thanks for grabbing some time with me.
Thanks, I appreciate it.